Markets ending flat amid volatile trading on expiry day, dragged by index heavyweights. Nifty was absolutely flat at the end of the session. Sensex also shutting short just shy of 57,800. In December, Sensex and Nifty were down nearly 2%. Nifty Bank underperformed, major indices down 6.2%. IT stocks dominated top index gainers in the December series. RBL Bank shed 35% after its management rejig and was one of the top F&O laggards. Diagnostic and chemical stocks were among some of the top F&O gainers. It was a spectacular year for Indian equity investors. Sensex and Nifty posted their best gains in 13 years. Soaring unicorns, private capex and significant pickup in the pace of vaccination added to the buoyant sentiment. So where are markets headed in 2022? Are we looking at another volatile year or year of new highs? Let's find out with our market guru, Prashant Khemka, founder, White Oak Capital. Prashant, great to have you with us. And given
thanks for having me here.
And it's the question everyone's asking, isn't it? That can we expect a third year of rollicking returns, or are we heading into a period of volatility, uncertainty? But before we get to that, let's take a look at the year gone by. A majority of the big performers this year actually came from the broader markets. We don't even talk about it enough. We talk sometimes thematically, but share with us the kind of returns investors made when it came to gems in the mid-cap and small-cap space.
Certainly. So, as you pointed out, we had the second good year in the fairly strong double-digit return in the major indices, 20+% return. But the broader indices like small caps, BSE 500 or BSE small cap index is up more than 60% year to date. Mid cap is up nearly 40%. In contrast to large caps being up a little over 20% or so. So certainly you've seen many more large moves, 100%, 200%, some of them in the small cap space or mid cap space than in the large cap space. In a year like this, typically that's what you end up seeing. If you were to compare this year to some of the prior similar years, it would be like 2017, 2014. Those saw these kind of moves in the broader markets. So it's been a very strong year. And some of the sectors where you've had more of such moves is certainly this year has been good for domestic cyclicals. Many of these names that had been out of favor for quite some time, they've had a very good year after a long time. So be it real estate or industrials, but also global cyclicals, commodities and so on have had some stocks have had very strong in this segment. And at the risk, this is at the risk of generalizing, though you could find such stocks in almost every sector. You also had IT services, mid-cap, small-cap IT services have a very strong year. Several names in the chemical space had very strong year. These are outside IT and chemical, outside of the deep or domestic cyclicals that I talked about earlier.
So, Prashant, would you maintain the current mix, in your portfolio? Would you suggest to investors to shake things up a bit, given the kind of returns that one has seen across some of these segments? Where do you feel there's still potential for further upside? Where do you think it's time to cap gains?
So, see, I mean, year-end is, while we as a society celebrate and all that, from a market's perspective, year end is no different than any other day or week or month of the year. It's a continuum, right? Businesses don't necessarily all of a sudden change around the year end or something. So our portfolio, there isn't any particular activity that the team undertakes that is different at year end than it is during the course of the year. So first, I just wanted to lay that out there. Second, the team tends not to, hardly ever, would have a top-down view on how the portfolio should look like. It's more an outcome of what we are finding from a bottom-up perspective. Some of these areas that I mentioned, we don't have much allocation, but yet in other areas we have quite a lot of allocation, and that's an outcome of bottom-up approach. And net, it's worked out well for the year, and there's so as such there's no year-end activity to talk about to reposition or anything portfolio. As I often say, the best position for the portfolio to be always in is one that never requires repositioning. And that's because we don't take much of a top-down view of the portfolio.